Hi, and welcome back to Accounting 482. This is session 3, continuing terms and the flow of information. I don't know why that doesn't work for me the first time. Okay, types of costs. Let's get right back into this. Direct costs and indirect costs. Now, direct costs are costs that can be traced to a specific product or product line. And it seems pretty cut and dry, but sometimes it's not so easy. But for example, advertising for a specific product is a direct cost. So for Apple, they came out with the iPhone 10. Well, they came out with the 8 and 10 at the same time. But if they did an advertisement for Apple, that would be for all of their products. But if they advertised for the iPhone 10, that could be specific. That would be a direct cost of that product. And the metal used to make the frame of a car, that's pretty easy, right? Just that's what they used, or I don't know, the plastic parts they have in them now. They used to be metal, but now not so much because they're lighter and faster and they get better gas mileage, right? Yeah. And the leather used to make a pair of shoes. So all of those are the direct costs, and they're pretty easy to find. Now, the indirect costs are a little more difficult, and these are costs that are not part of a specific product or product line, like the advertising for Apple. For example, advertising for a company, security for a plant. Now, these are things that we have to have, but they're not specific to an individual product. And then utilities for the plant. Those are a little harder to pinpoint down also. So indirect costs are assigned to the different product or lines. So in other words, the company divvies up the costs, these indirect costs, to be covered by the different products or product lines. For instance, if our power bill is, $500 for our factory, and we make a certain amount of, a certain amount of products, we could divvy that cost up between all of the products, right? That way you can get a true cost of what it costs to make that item. And that's what we're trying to do. We're gathering all the costs so that we can get the true cost of the item. Now, period costs are costs that are not related to production. And I know that you've heard this before in other accounting classes. These are expensed immediately. And this, you can think of it as period costs are costs that are incurred from the office. And product costs are costs associated with production. And these are inventoriable costs. For instance, these are direct materials, direct labor, and manufacturing overhead. So let's think about this for just a second. Period costs are in the office, not related to production, and they're expensed immediately. And product costs are associated with production, and they're inventoriable. So we've got our factory, and we have our office. And the factory is all the manufacturing or the product costs. The office is your period costs, okay? And now let's think about the list. And I didn't want to bore you going one by one, so I'm just going to throw the list up and then we'll go through those. The raw materials are product costs, direct labor, production, or production supervisor, I should say, plant manager, depreciation, safety costs, janitorial, warranty costs, quality assurance, and security. Now we can all further break these down into direct costs and indirect costs, right? Indirect cost would be anything that's not direct. Direct costs are raw materials, direct labor. Those are your direct costs. Everything else on that list, everything else is manufacturing overhead or indirect costs. Now our period costs, these are expensed immediately. And that typically happens in the office. Accounting, the executives, the office equipment depreciation. So we're going to have depreciation on the plant and all of your assets, right? The plant, the equipment, any of that is going to depreciate. If it's in the factory, with production, that's a production cost. If that equipment depreciation is in the office, it's a period cost. Advertising, sales, commissions, service department, and parking lot maintenance. All of these are period costs that get expensed immediately. Now, sometimes there's shared costs, and the shared costs can include insurance because you pay insurance on the factory, the entire factory, but the factory has got production and it's got the office. So a portion of the insurance would be a product cost, and a portion of the insurance would be the office cost. And you need to, as a manager, decide how much of the factory is responsible for the insurance cost and how much of the office is. Same thing for utilities. You have the lights on in the office and you have the lights on in the factory, right? So you'd have to separate that out. And then rent, same thing. You've got the entire rent for the whole factory. What part of the rent should go to the product cost and what should go to the period cost. And then storage. Storage of raw materials would be a product cost, and storage of products that are already made would be a period cost, right? So if you store your raw materials, that would be a product cost. But once everything is made and it's waiting, it's in finished goods inventory, then it would be a period cost. So now our direct materials can be their materials used directly in the manufacturing of the product. For example, coffee beans to make coffee, flour for making bread, cloth for making clothing, and lumber for building houses. Direct materials are the actual direct materials that you use in production. That's pretty straightforward. Direct labor is straightforward as well. Salaries, wages, and benefits paid to employees working directly on the manufactured product. Now, why do we say salaries, wages, and benefits? Because if you pay your personnel $15 an hour in wages, but when you factor in their vacation, their health insurance, their retirement plan, their dental insurance, if all of that adds up to $10 an hour, you need to charge direct labor at $25 an hour. Not just the wages that they're earned, but the benefits. The true cost of that employee needs to be charged to direct labor that works directly on the product. So workers on an assembly line, line supervisors, because line supervisors you can work on, that you can see them working on the product, okay? Now, an executive, it's harder to take their wage and attach it to a product. That's why it's a period cost. And then the baristas making the coffees, right, at Starbucks, that's a direct labor too. But you have to include all of the wages, not just their hourly pay, but all the full cost of what they cost you as a manager. Now, there's two types of costs. It's prime cost and conversion cost. And you'll see this in homework assignments and cases and things like that. It just depends on what the company refers to these costs as. Some of them call them direct and indirect. Some of them call them prime and conversion. It just depends on what the company uses in a regular term, and you just need to know all these. So prime cost is the cost of getting things ready for production. Direct materials is a prime cost. Conversion cost is the cost of converting raw materials into the finished products. That would include direct labor and overhead, manufacturing overhead, I should say. So prime costs are the materials, conversion costs are making the product. So here we have a chart of costs, and the dark blue here, the big dark blue here, is your direct materials. So this is for pretty much for any item, because I did not specifically use an example. I just direct materials are flour, coffee beans, lumber, cotton, whatever a direct material would be. And then our direct labor is our labor over here: labor, wages, benefits, and health insurance. Manufacturing overhead in this lighter blue: rent, utilities, quality control, security, depreciation, oil, janitorial, and indirect materials. All of these are, should not have a comma. All of these are your manufacturing overhead costs. And then the gray is your period costs. And we're going to go back to the pen and write pretty bad. This here, the direct materials, these are your prime cost. Okay. So right there is your prime costs. And over here is your conversion cost. And it includes that, and it includes this. Now, period costs are not associated with manufacturing, so they are not included in conversion or prime costs. Okay. Now, manufacturing overhead. All other manufacturing costs are overhead. For example, indirect materials, which would be machine parts and cleaning supplies. Anything they use in the production of those items that cannot be directly associated with that item. Glue. It's really hard to pinpoint how much glue is used on an item. Or nails. There are some manufacturers that say this item needs 27 nails. But some, maybe you're making chairs and you make different chairs, and some, excuse me, some of the different chairs have different nails, different amount of nails. So sometimes it's harder. But like machine parts, if you have to change out the machine parts and they wear out, that is all part of manufacturing, and it's indirect. Indirect labor is a plant supervisor. You cannot specifically figure out exactly what product he's working on because he works on everything. So that's indirect labor. And then the maintenance personnel, same thing. They maintain the building, they maintain the machines, and they cannot pinpoint what product they're working on, but they are a cost, and they are a production cost, and they need to be put into that so that you get a true cost of making your item. Now, other depreciation items is depreciation on the plant and the equipment. So the depreciation on the plant and the equipment, anything in the factory, is included, where depreciation on your period cost items, your office equipment, is a period cost. And then the insurance on the plant and equipment is also a cost. You want to take in all of those costs to figure out how much your product is costing you to make. So now the flow of production costs. The first part you do is, as materials are ordered, you record the price in raw materials. And this is what your accountant will do. You put that in your raw materials account. And then as raw materials are moved into production, we transfer those into work in process. Okay. And then you record the amount paid for direct labor into work in process. And then using a cost driver, you allocate your overhead costs to work in process. And then once the product is complete, you transfer all of those production costs into finished goods. And then as items are sold, you record their cost as a cost of goods sold. And then you calculate the difference between the sales price and the cost to get your profit. And I'm sure that this sounds familiar to you. You probably learned this process in Accounting 202. But we're going to show you in a picture, and it's a bad picture because I couldn't find the little icons that I wanted, so I had to do it in PowerPoint. So that's pretty tough, but I did it, and I want to show you this concept here in my drawing here. So this is my factory where the raw materials warehouse is, and this is inventory. This becomes inventory, raw materials inventory. And you order that and it goes into that warehouse. Now, as you use it, you move that to your factory. So you take your raw materials work in process, you take your direct labor work in process, and your manufacturing overhead, and you put all of that into work in process into your factory. And then once those items are finished, you move them to your store. And this at this point they get moved into finished goods because now you can sell them. You can sell them to your happy customer, and you can call that cost of goods sold. And this was this could have been it was better on paper. Like I said, I had the overhead and I could draw it and it looked a little better, but you get the gist of how this works. You will not have to worry about the journal entries in work in process of how that all goes in, and you will need to understand how cost of goods sold is calculated, and we'll get to that. But I just want you to just want to refresh your memory about how all that works, so that when we get to cost of goods sold computation, you'll be more familiar with it. And now I want to show you how those items come up on the balance sheet and the income statement. So first of all, your inventories are right here. Shows up right on the balance sheet. Inventories. This is your work in process inventory, finished goods inventory, raw materials inventory, and direct labor inventory. All of that is in here. And then cost of goods sold comes out on your income statement, cost of goods sold. So you use your inventories to compute your cost of goods sold, and that tells you what your net income is. So I want you to know how it all works together and how it shows up on your income statements so that we can compute these going forward. Now, why do you need to know these terms? These classifications form the basis for all the tools that we are going to talk about this semester. These common terms are used continuously in business. You need to know them to communicate with other employees, your manager, your accounting department, investors, and bankers about your business. So you need to talk internal employees about these terms and external people about these terms. And you need to know how to classify your costs so that you can use them correctly when making business decisions. And I went through this pretty fast this session. It was a continuation on the last session, but I do want you to know that this is what you need to know. There's other terms in the book. Please look at all of those, and then we will continue working on these through you'll continue hearing these going forward in the class. I'm going to end session 3 right now, and we'll see you back for session 4. Thank you. Wow, that's loud. We'll keep all those, and then we'll